Hello, Warriors, and welcome back, Kman.
Thank you
Welcome
very
back.
much, amigo.
Hey, amigo. Great to have you back, Kay. Big shoes to fill, though. You know, your partner.
My partner's shoes? Let him have his shoes. I'll keep my shoes.
It probably has a little, it probably needs to spray him anyway. It's really great to have you back, buddy.
Thank
Um,
you.
AJ, good morning to you and RC and Mike and Ingmar. Yes, I do feel liberated. It's once in a while the markets can do that for you. That's why I was talking about yesterday. Liberation Day should be for you to get better so that you can do this for a living. Okay. And, you need to be around a group of great traders to get there. I'm not saying you can't get there on your own if you have a lot of time to invest. Took me 30 years to learn. I'm getting the hang of it. You know when I started getting better? I'll tell you the truth. What did I say? It was our 9th anniversary. I'm a different trader than I was 9 years ago. And it's who you hang out with. You know how your parents would say, "Oh, don't hang out with those kids; they're a bad influence." And what about these guys? They're good students and athletes, etc. You do the same thing in trading. Okay. Um, okay. So thank you, Jack. How are you? 24 hours. Bran, Blake. I know Blake. That's something else. No one in here, um, in F.A.C.E in the community, that you didn't find any dollar bears for quite some time, have you? So uh, we didn't have people, trying to get short for pullbacks to 105. We knew that wasn't in the cards, right? Who's joining today? A new member? Anyone?
Should be everybody because
Well,
this is going to
yeah.
be the craziest next weeks coming up, I think. And good
Well,
morning,
maybe
Coach.
everyone that's here in F.A.C.E has already done
Maybe,
it. Just kidding.
maybe,
I've
maybe.
I've had a good majority of them have. Well, I mean, at least part of them. Anyway, thanks, Bran. So let's get to the markets, guys. Uh, I don't think there's any big news till tomorrow, till the NFP. Am I correct, Blake?
I mean, we're going to have
Any
weekly
big
unemployment claims, which is the
uh,
most real-time jobs data that we can get. I don't know if it's going to
yeah,
get off that 230 mark too much, but hell, you never know. Maybe today's the day that we all get surprised about stuff.
yeah.
So maybe that's it. We do have ISM services data a little bit later, which, obviously I know everybody's focused on what had happened yesterday, but these are data points that can still move the markets for sure. And by the way, welcome back, Kman. Nice to have you back. Welcome
Thank
back
you
from
very
Japan.
much, Blake.
So this was really, I feel liberated, Ingmar. Okay, because last Friday, and so I caught both sides of this trade. I traded this wedge with the target of 151 being 100% retrace. We got there once, and then the second time it was losing mojo. So this was Friday, and this is today. I feel liberated. But you know what really makes me feel liberated? Because I took a lot of heat for being negative miners, and it's different than being negative the physical. That's why I said the miners were weaker than gold, and Newmont was weaker than GDX. That turned out not to be true. GDX was a better short. There's already been more of a percentage loss, but the miners are taking it on the chin too. So liberated from that too. I think that this could be mark a pretty important high in gold, especially if we take this out. And now we'll enter a corrective season. And I use my weeklies to come up with where I think gold could pull back to. And gold is still outperforming. You should see this gold silver ratio. Was I wrong about that? Okay, so um, why not back to 2,600? It was a big area. 26.25. I have a black line here between 26 and 25.20. I think be a normal correction. This is probably wave 4. So, we could pull back there. That's a big trade from here, 20%. Silver, I thought we were going to make a run for a third drive, turn positive at 31.80, and this is not a good sign. It's almost like it's failing to complete this three drive formation here. And to me, this megaphone formation points towards 27-ish down the road. And that'll be a backup to truck trade because all that we've had, all of this has been 1, and this is going to be 2 down here. And you know what that means, what's coming in after this. So, God, I don't know who sold the close yesterday. Blake came in. I'm watching the close. Everything closed great, right? I mean, here we were before our emancipation and liberation, right? Didn't this
Oh,
happen?
everybody was positioned for not. I mean, that's about the hardest you could have gone, on a tariff front. And you can't. I mean, there's yeah. I mean, that's just catching everybody wrong-footed. Everybody's like, Trump can't. He's not going to do that. He's going to
Yeah.
play nice. And
Well,
yeah.
I mean, look, we're technicians. We can't guess fundamental outcomes. We have to go by what the market action is telling us, right? So that's really what makes it difficult, because this candle right here was into the close, and this was a big area to. If it started to get through 57, you got 58 next, and then everything changes in a New York minute, and here we are at new lows and diverging. So you have your sea legs back, okay? In fact, I know you were trading while you were over there because Blake said you were posting in the room. So
Just had a couple of things on, but nothing really specifically dollar wise. But yeah, I'm sailing already again. I mean, I had to really jump in the boat very fast today, right? With
yeah,
everything.
yeah,
Just on your gold and silver. I think we saw this spike in gold, and I was talking about it on the Flow Show as well, and just putting out the question: how much more do you want to hedge against all bad things in the world and on gold? And so I had a very decent level, 31.5, 32, and we stopped right in there. So now I think going forward, because the whole thing is now there, right? The tariffs are there, potential retaliation or renegotiation, but that remains to be seen. That is still very much, those are still very much moving parts. But I think again, the Asian sessions will be important because that's where Trump slapped the biggest tariffs upon, right, to the Asian countries, and we know that they have been buying crap loads of gold
gold,
as a
yeah,
hedge. So did everybody else. But I think the everybody else is the ones now that may detain a part of the key because, as I said, how much more do you want to hedge against all bad things? Now, that is something that real monies will have to tell us whether they are going for a full whack. This is a recession play in the US, in which case gold will not correct too much, but silver will be a big laggard then because they if you trade bad things in the world, that means like lower growth. Silver is something that, as I always say, needs a bit of a better overall scenario. I think if everybody gets around a negotiation table and Trump crawls back and or scales back all those tariffs, then you will have a top in place in the gold silver ratio. But for as long as we trade this one, we need to be a bit careful. But again, I'm not going to buy this I'm not going to buy this rally in gold right now. I'm waiting.
Did you short it? Did you short it up there at your number?
No, I did not. But I think 2990, 3000 is going to be important from well, not only a psychological but also a bit technical. If it breaks below there, then I think we could have a quick move lower.
Okay.
But we
So
have seen those.
nothing really actionable right now.
No,
You're
well,
just a looker.
unless you want to counter trade that 31 and 31 and a half, 32 area. I really think it's a very important zone. Um, and it also coincides with what I was kind of looking for once the tariffs, a potential US slowdown would come into play. But it's all gone a lot faster than I actually thought. I thought we were looking at Q2, Q3. Okay, we are in Q2, but just. So it's perhaps going a bit fast, right? Silver, I would be a bit careful because if really, as I said, if the real monies don't believe or believe in a global economy slowed down, which is very possible, and US this time could be taking the lead, then your silver is probably not going to go much higher right now, and could actually go and revisit what your levels there around 26 or so, and the market could go very, very rapidly. That is one thing. But
Blake and I talked about yesterday when we were ending F.A.C.E, not to poo-poo the Asian session, that we've seen it mark many turning points in the
yeah,
market, and voila, there you go in gold, right, Blake?
well, it
Yeah.
happened in the European session. Huh?
Oh,
Asia
was it?
was, yeah. Asia was still trading around 31 and a half, when
Yeah,
we walked
okay,
in early this morning, we were still up
okay.
around like 31.40 or
But
so.
the high was made in the Asian session.
Asian, and didn't you guys make the high right after
I
the
think, yeah, I think it was right after
announcements?
the announcements.
Yeah,
Correct.
yeah. I rather, yeah.
Oh, okay.
Hey,
Mm.
All
hey,
right.
by the way,
Anyway,
I'll
go
be
ahead.
back in just a minute, but I know Steve is here too, so I'll be back in
Okay.
1 minute. All right.
All right. So,
Oh.
when I look at euro now, we've almost gotten to
Mm.
some targets. 111, 112 was kind of what we're looking for.
Yeah.
I don't know how you chase it, but I mean,
Um,
this
I
this is definitely a vote of no confidence for tariffs.
Yeah, there's a vote of no confidence for the dollar. On the other side, there is a still this. You remember, we even spoke about it before. I went to Japan. I said there's some kind of a feeling in the market that Europe is trying to get its act together
Yeah,
on those spending and those this expansion thing in Europe, especially Germany, and now they are trying to really rally together. Versus the US as well. And that I think is something that I'm not saying that we are going to shoot through 111 and a half, 112 and a half, but if there's more if there's more worries for the states, I think we could see a potential break higher and perhaps go up to 115,
yeah,
I think it
yeah,
is possible. It is possible in current context.
yeah. I think
Um,
120 is possible.
Yeah, oh yeah,
So,
but one
yeah,
step at a time. Although
yeah,
the steps are pretty big, if you look at it since the announcement, we have done what 300 points already in the euro,
yeah,
so
yeah,
things are going very rapid. And that also brings me back to what I've been saying a good number of times, is that the moves that we are seeing now, they are you can sit still for a while and then all of a sudden have like a pretty rapid move, and that is something that we still need to bear in mind when we trade, because we are traders. So just to bring it back on the trading side of things, just be careful with what you do, because the moves can also all of a sudden become a bit outsized, and we've seen that on the euro as well. When it broke above 110 and a half, we done nearly a big figure really, really, really fast.
yeah.
And that is something I think which we are going to see more of in the next coming weeks, for as long as we've got so many moving parts.
Okay. Bitcoin came off of some important
Yeah.
resistance.
All part of the no confidence
It's,
vote.
yeah, it's all one market, isn't it?
Yeah.
The only difference is the dollar.
Mm.
All one market used to mean you had liquidation day, the dollar would get a bid. That's not happening
Uh,
anymore. I
uh,
keep asking people,
That's
everyone I interview, that
yeah.
a lower dollar doesn't mean risk on anymore, and
No.
they keep telling me it will again.
But
Well,
actually, Dale, today it
good.
could. And that's the
It
thing.
could.
And that's why when we're at such a major level on the dollar, the reason why you might get
Well,
some
today
two.
it could, but
Yeah,
that's
yeah.
after a a tsunami move to the
Well, that's
upside.
the thing, Dale. Last week, on the week ahead video, I'm like, man, if this tariff news is bad, Euro's trading at 111, you're going to start to see
Yeah,
two-way price action because people are going to go, holy shit, that the world's going to hell in a handbasket. You're going to start to see dollar buying, and that's the point we've been trying to make for the last week. Now we're here, so now you have to be respectful of the fact that we're down. Like look at some of these stocks. Go look at pre-market. There are stocks that are down 6, 7, 8% in the
yeah,
Mag
no,
7.
Apple. I'm aggravated about missing
But
Apple, even though
but
I
that's people are gonna go, holy shit, the it is the literally the crap is hitting the fan and I need to start buying, I need to start getting out of stuff, buying the dollar.
okay, it's a
Like,
delayed reaction. Then it'll be
yeah,
a delayed
yeah,
reaction.
but
Okay.
the fact of the matter is, Dale, we've been on it for like literally weeks, and we've been talking about exactly what you're saying is the dollar has not been the safe haven, but we are now at a point where you might start to see those flows come in a little bit, and that's why I think we're going to see some two-way price action. But Kman's exactly right. There are a lot of moving parts. We could get headlines literally from today or to the next several weeks that could put the euro 300 pips higher, it could put it
There
300
you go.
pips lower. We could have that type of action that can move the market, and we have to be extremely sensitive to where we're at now. And I know most of you guys have seen it, so I'm just going to throw this out there. That is when Giselle said, "I'm only getting paid in euros," and that was in 2008. And that's the trend line, and it comes in right where we're at today. We overshot it by about 50 pips today. We overshot the 161% extension by about 50 pips as well. I expect that the euro is going to we're going to start to see some moves around here. I do think the euro is going above these levels. I eventually do, but right now, today, after 300 pips of a move from the lows, you got to be a little bit more open-minded to, some other things might come our way. I do want to hear from Steve really quick before I go into just a couple really key things that I think are developing right now. I just want to get Steve's opinion on, was it Libations Day or is it what?
Liberation Day.
Well, libations is don't we take some drinks to that's what libations mean, right? There's libations day.
Yeah.
Anyway, all right. So, Steve, what do you feel about Liberation Day?
Um, First of all, I'm a little bit confused. You want to tell me that I shouldn't be taking my financial advice from supermodels?
I no, we really should.
Okay, because that was my main source of information, and you would really destroy my world if that was the case. Um, so I if I remember right, I concluded the morning ads yesterday saying that it's been 3 boring days, but I have full faith that volatility is going to be with us this year. I was saying that since last year. And I think today is a very good demonstration. I didn't expect that much of a volatility today, to be honest, but it's a very good demonstration of how that can feel, right? Listen, one thing is for sure, it's going to be a shit show because we are going to be seeing some side effects from these measures. And I'm the one that has said that the Trump administration might not budge to fluctuations in the market, specifically because it's extremely early in the presidency. So nobody's going to be voting next month or a couple of months from now. And nobody's going to be really caring in 3.5 years from now if there was a dip in stock markets 3.5 years back. But obviously, at some point, this type of price action and risk off is going to start spilling in recession probabilities, et cetera, et cetera. So,
Oh, Steve, since you said that, let me just show you something about recession probabilities.
Absolutely, mate.
Just oh, your microphone's much better. This is
Yeah,
the
I just switched microphone.
Yeah, this is a quarterly Atlanta
I know, I've seen
GDP
it.
now
Yeah,
forecast, and
yeah, yeah.
everybody's like, it's not a big deal, and I'm like, is it not a big deal? I mean, yeah, I don't know. I mean, that chart doesn't look pretty.
No,
Going
it
from
doesn't. Although a recession is 2 consecutive quarters of negative growth, right?
right, but then you just threw what happened
Yeah,
last night
yeah,
on
yeah, yeah.
top of everything else. Then what? Is everybody
No,
going to turn
no,
optimistic after today?
no, no.
What?
I'm 100% with you, and that's why
Okay.
I said that I do believe that at some point there is going to be, they're going to have to walk back at least some of that, right? I still believe that this is mostly uh, like hard negotiation type of tactics. Go hard on them with the hopes that they're going to give in and they're going to concede and you're going to have some kind of an intermediate deal.
But
But
how about if they don't? I'm saying they like, how about if our trading partners are like, you know what? Piss off. We're gonna go back. We're coming back at you. We're not gonna bow
yeah,
down to
I think
you.
it's a likely scenario because when you
Yeah.
overdo it, it's extremely likely that you're going to trigger that kind of a response.
Right.
You know what?
Right.
You know what the tragic part is that we're not thinking about this? That even if the politics would change and Trump's not president in 4 years and uh, all those alliances, trust is broken no matter who the president is. That's why the presidency has to be more than just about parties. There's got to be some continuity. And now to rebuild that trust, no matter what's happening in America, it's gone.
I couldn't agree with you more,
It's
actually. But
gone.
Yeah,
No
okay.
let's hear it
matter
from a
who.
European. Let's hear it from, some Europeans in the room. And I mean, what
Uh,
do you feel? How do you feel about
Steve
that,
will
Steve?
take the other side just for the
No,
sport
no,
of
no,
it.
no. I'm not going to
Uh,
take the other side. I'm just going to tell you that things have definitely shifted since the past, and politics have become a lot more fluid than they used to be some time ago. And yes, I do agree that trust is something that it's hard to build, but extremely fast to lose, and then rebuilding it takes a lot of time. So I'm 100% with you.
oh, hold
Uh,
on, hold on, hold on. Forex trader, you were looking for 105, 106. All right. And one thing, when you make a call, it's almost like um, we're fools. You put it out there like anyone who wouldn't follow you is a fool. Okay. And you just changed your narrative from 2 days ago. Okay.
Come in the
Anyway,
chat room and trade it. Come in the chat
yeah,
room and trade
yeah.
it.
Anyway,
Look,
so I mean,
you
at
want to see
least
where we
if you
got
want to
limited
make
out
a
of
comment,
positions overnight? Come on, bring
yeah,
it.
be polite and give people at least a chance that they might be right too, and you don't walk on water, Forex trader.
Uh,
Okay, that's it.
Trading and calling are two totally different things.
Yeah, they sure are. Anyway,
100%. Anyway, go ahead.
Brand walks on water in his bathtub. Okay. Anyway, so all right. Sorry, guys. I guess I'm getting a little emotional lately.
It's
I'm
these
gonna-
days.
Dale, if I could smack you in the smack you and like kind of give you a light slap on the cheek, like, hey, buddy, come on, let's
All
deal with
right,
it.
I'm better. I'm
All right.
better now, man. Okay,
All
I'm
right,
better.
all right,
Are
all
you in those days of the month, Dale?
No, I'm in.
Okay.
I'm past menopause, bro.
Okay.
Hey, listen, look. I do want to hear. I want to hear Kman's point of view, though. Too. Sorry, Steve. We're just running out of time. I did
Yeah,
want to
man.
hear Kman's point of view. Like, how do you feel about the repercussions of the actions of the Trump administration longer term? And then I got to cover just a couple of technical levels that I think are important going into today. But go ahead, Kman.
Yeah. As I was saying, like coming back from things and after Trump, I think there's a reset of US exceptionalism going on, and that's been gradually coming since Trump took the seat. Especially, it's been already coming, from mid-February, early March. We still saw dollar demand, but it was all less confident. And now there's a clear shift, if you want to call it, reset in U.S. confidence, but I would argue we're not in a US crisis yet.
I agree with you.
As I
100%.
say, there's still too many moving parts, and a confidence crisis doesn't happen overnight. And well, you know what? If it would happen, watch out, because then you're going to see different moves than the ones we have seen right now. I mean,
Right,
it
the
could
bond
be a
market
start
would
off.
be showing us that, right?
Sorry?
The bond market would be showing us that.
Bond market, I mean, that's indeed
Gold,
what I was going to
gold
say
would be showing
earlier.
us that as
The
well.
reason how you can have a lower dollar is that when equity markets and yields come down at the same time, because that's not your normal picture. In when everything is just zooming on, you would have like the picture where if equities goes down, dollar goes beat, because usually the yields go higher. But a real confidence crisis is that when your yields
What's
in the
happening
US will
now?
absolutely collapse and the equity markets collapse. And then please get out of the way, because that would be something different, because then your real money, or people call it the big money, they will absolutely hammer the dollar. And then you're talking not about 120, but you're talking about probably 140 or 150 in the euro. But I mean, we are not yet there. And so timing will tell whether there is either retaliation, strong retaliation from both sides, the acceleration of retaliations, let's call it that way, that could cause it, or negotiations. But we're still not out completely of that, right?
Great,
But I
great
think we will
points,
have the
Kman.
answer before end of Q2.
Great point. All right, and so that's why you guys got to, we have to be really respectful if you start to see some of these bigger moves develop. I do think that the euro is going to be, even if it's just for the next, few days, I think we are going to be around these levels, back and forth. We might be 100 pips higher, might be 100 pips lower from here, but the euro path seems very, very clear now. I mean, this is a very clear, bull flag pattern that is eventually making its way towards the 1-teens. That's something that, again, I playing both sides now after being limited out of some positions overnight, being short dollars. Now I'm very respectful of the idea where we're at. I am playing two ways, and I am starting to buy some dollars here already today. But I do want to be very well aware of what we're doing, and I don't want to be overexposed, because being long the dollar overnight is not my cup of tea, and it's something I've told everybody for literally the last couple months. Just, I don't want to do it. You could do it if you want, but I'm not doing it.
Can I do it with your money?
Yeah. I won't even do it with Stelios's money. So, one of the things I want to also show is S&P is down quite a bit. If you just take a look at some of these equities, just here, we'll just grab like Nvidia down 6%, pre-market, Meta down 5%, Google down 3%. Some stocks have managed to do a little bit better, like Microsoft's only down like 2.5%. But look at Tesla. Was up 6% yesterday, down 6%, or up 5%, down 6%.
By the way, Blake, you know what else is almost 6% down on the day?
Oh yeah,
silver.
Oh yeah, silver's. Oh my God, it is hitting new lows. Oh my God. Here's we do have weekly unemployment claims, guys. Sorry, we got to pull that up sorry, I'm just realizing that we're, oh hell, we'll just look at the euro. I don't have time to like flip it all around. Sorry, guys.
Should I cover my Newmont puts here, Steve, or stay short miners?
Trade
So
balance data comes in a little worse.
Sorry, Dale, give me
Relax.
Look, yeah, look at the weekly unemployment claims. Still, I mean, nothing to get worried about. Still, remember we do have ISM in a little bit, so that's another
Good
thing.
idea.
Dale, do you have your interviewee
Yeah,
here?
Steve Miller is here. Yes,
Oh, okay.
Slim.
All
So
right.
Steve is here. I'm trying to, Steve, please accept the promotion. I'll
Yeah,
demote you after
or
the
maybe
interview.
Steve can help you. Let me just say this, guys. For literally the next, well, probably until summer. I'm going to say until, let's just say June or July.
Yeah.
It is going to be freaking volatile out there. You should be in this community, in the Forex Analytics community, having conversations like this all throughout the day, 24 hours a day, literally having conversations with traders from around the globe, talking about what they're doing, what they're trading, having the same interests as you. And people, and you can talk to people about the markets and not worry about, being hazed or anything else. Look, it's a community that we're real tight. Some people I've been chatting with literally in this chat room for about 20 years, like Rick, Benedict, Lorraine. There are a ton of them. So make sure you jump in this community. It's $1 for 10 days. Try it out. You should really be part of the Forex Analytics community. Plus, you get this awesome tool with all these, great features and whatnot. So I am going to pass it over to you, Dale. I want to thank everybody for Kman taking over for Ryan. Ryan's going to be out for a couple of weeks because he's going on vacation to Spain, I believe. And Kman, we're really happy to have you back. And congratulations with the grandbaby. It looks happy and healthy, and looks like your daughter-in-law and your son are super happy and healthy in Japan as well. So welcome
Thank you,
back.
man.
And Steve, nice to hear your comments from your point of view today as well. So thanks everybody for being with us. I'll see you on the Morning Edge in 45 minutes for the Forex Analytics subscribers. So will Steve. And then on the daily roundup a little bit later today. And for the rest of you, good luck today. It's going to be a crazy one.
All
Thank
right.
you, guys.
So very good job, Blake, Kay, and the rest of the crew, even me, for keeping people on the right side of the dollar during a major historic event. We're seeing it right before our eyes. So good job, Dream Team. And you know how we talk about we need to have a good community. There are many out there. We're not the only one. Find one. Steve, you have a community where people get together. You have chat rooms where you work and people talk about the things you teach and what's happening in the markets. Welcome back.
Hey, Dale.
Yeah, Steve, I hear you.
Okay, good. I wasn't
How are
sure
you?
there. You got another guy, Steve, there, so I was a little confused about who you were talking to.
Well, okay, yes, it's
Yeah.
I'm talking to you.
Yeah, all
And
right. Good to
God,
be
so
back.
yeah, man, sea change since you and I talked last. Why don't we just get right to it, Steve? And
Has there
uh,
ever been? And this was, good planning where you scheduled me a couple of months ago to come here on this day of big moves. So you
yeah,
you had good foresight.
all right. Well, look, I knew that this year, and I think we talked about it last year, that people weren't just going to be able to go by the SPY for 3 years and play golf every day.
Yeah,
That
yeah.
they were going to have to learn to be tactical.
Well, we talked about that, and
Yeah.
a little bit of a timing change on some things since I was here last, especially in the dollar and gold. But ultimately, the bigger picture, everything is going pretty much as expected. So we can talk about that. Where do you want to start?
Okay, how about this? Silver lagging dramatically. This gold silver ratio went higher than I thought it would go to. I mean, it's blowing off right now.
Yeah, I mean,
Is this a failure in silver? It never really did much. I thought we'd go to make one more new high in silver, and that didn't
so
happen.
you can you see the charts here?
Yeah,
Just want to be
got
sure.
silver up there.
Okay, good. So silver has been in, a positive pattern, even though it has very much underperformed the gold market. I think that the real key here, when you look at silver and gold, is that gold seemed to be the gold investors, speculators, the users of gold seem to be much more interested in getting ahead of the tariff situation than we saw in the silver market. So we saw that, and the combination of that and the weaker dollar, there was a tremendous amount of buying going on in gold. Silver was not, of course, keeping up with that, as we saw.
Steve, was
And
that? I'm sorry to interrupt, but was that what the whole transfer of all that gold out of the UK to New York was about?
yes,
Getting
and
in here,
now,
all in front of front running
yes,
tariffs.
but now
Okay,
they're exempt from tariffs, so there's massive
okay.
supply out there.
Oh, got it.
So that's why we're seeing the big drop in gold and silver. And plus, when you get into a period of a flight to liquidity like we have right now with stocks plunging, historically, gold does not escape that. And that, people have to raise money. They raise money by selling everything, especially their winners. So that's why gold has had this big reversal today. And I tweeted about that a number of times the last couple of days. Look for gold to lose its luster here because that's what's going on. So the silver market has this big downward turn, as you can see right over here. And for those of you that are brand new to our work, we do cycle analysis, and on the bottom here is cycle brackets. Those are our guides to find the cyclical rhythms that we see here in the markets. And this is the silver pattern right over here. And you could see a beautiful harmonics in silver as they follow each of these money flows, essentially what it is.
June, July lows coming up.
This is a big downward turn. This expected June, July lows out of here. That's not a big surprise to us. It was still positive, and even though it was, getting up to these fib extension levels, we thought it would get to $35, and it actually did get there. So that wasn't bad when you look at that. If you look at the gold chart, and I'm going to put up the gold and the daily in there also, because that's important. This is the diamond you and I were talking about when I was here in January.
Yeah.
And I said, well, this looked like it was going to roll over, complete into this cycle right over here. And you said to me, well, what if we break out of that diamond on the upside? And, then we talked about what could happen on the upside, and that essentially happened. And I had my longer term projection was 3,200, and I made a projection that at some point gold and the S&P 500 would cross somewhere in around 3,200. That yet may come. So this still bullish, but we have a reversal going on. Here is the daily patterns, and you can see where these yellow areas are the periods of risk. And this is exactly the spot that we would have expected to get this kind of a reversal. Gold to me looks like it's coming down to a 30.60 down to about 30.20, probably in the next week or two. And then it would be turning up again for another attempt to the upside. But I think that this corrective period that we see in gold and silver coming out into this June-July period is going to start to put pressure on the markets, gold and silver market, the metals markets, and they will actually have this corrective period. Probably get gold under 3,000. So
yeah, I'm thinking 26 or so.
Yeah.
So while the metals are declining into July, I kind of thought, we'd have a rocky period with all these things being broken, trade routes, with tariffs and everything that, you don't crash an old system and replace it without repercussions.
Correct.
So I was thinking that everything kind of got cheaper into that June, July period.
Well,
you think this bear market in
it's
equities could last that long?
It is a perfect alignment. Let's take a look at the S&P 500, where you see right over here, and I'll just blow this up. And all along, we have been talking about this decline coming out here into this sometime between May and June. And that's what we have right over here. You can see the periods of risk right over here. And this is actually a bigger one because we turn negative over here. And this is our reversal scout, which is very helpful and tells us when these cycles are rising or declining. So we've been looking for 5,400, maybe even down as low as 5,100 here. If it gets to that monthly 38.2%, which is possible.
It is.
This area between, in the 5,300s to 5,200s is pretty reasonable on the downside. Now, of course, this market isn't open yet, so this hasn't updated. I don't have it set on 24, but it's going to be back down into this 61.8% confluence right now. And you could see the gorgeous harmonics that are in here on these cycles that really have pointed well to these corrective periods right in here and here, even in this rising bull market. But the bull market's now over. And we have on our monthly chart, we have the correction going into 2026. Though over here, the second in Q3, late Q2, Q3, we expect some kind of an upward recovery in here that would set up another very significant major leg to the downside into 2026.
Okay.
So that's
the worm has
weekly.
turned.
This is the, pardon me?
The worm has turned in equities.
It has,
Because there still
definitely.
are guys, we really do need to, people bought this 10% correction, right? Because it's been working for 1,000 years. And they
Yes.
haven't been punished for buying the first 10%. There could be another 10% here back to about my targets for a while have been 4,900, the megaphone, and there's weekly moving averages. There's so much confluence there.
Yes.
That would be enough, I think, if we were down at 4,900 to start looking to buy this market. Do you think so?
Yeah, my number is 5,100 here, and right now I'm going to look for that and kind of hold to that. But, I think it's going to be way, way lower into 2026. So,
You have anything coming up? Okay, so all right, then give me your 2026 number. Are we back at 2,500 S&Ps or
well,
3,000? Cut it in
the
half.
the major support, I'm just going to bring a monthly chart over here for you to see. The target over here where I would be projecting, out, and you can see the cycle rhythms in here that take you out to mid 26.
Yeah.
I would be projecting, the first target over here, 4,800. This is 4,500 right over here on the 61.8%. That would be, you could see here the 50% is a 21.6% decline. After getting up to 207% valuation compared to GDP, I would expect that it would be much worse than that. So, the 61.8 is at about 4,500. I think that's pretty reasonable. You could get all the way down here to this last support around 34. That's what I was looking at as the potential for gold and the S&P 500 crossing in those levels right over there. And that's a very extreme situation in here for it to get there. It would take really a significant market panic. But if you want to, talk about, why, it's because the stock market's been inflated for decades by massive government spending, huge debt, the Fed accommodating crises in some very extreme way. And that's how we got up to 207% of GDP. When the fair value is probably about 140% of GDP. So, and the normal bear market is on average is about 33%, with bear market lows about every 53 months. So it's pretty reasonable to expect to get to the 4,500 level or lower on the S&P 500 in a normal bear market situation.
Yeah. So Buffett did it again.
Yeah, I mean,
do you chart real estate at all, Steve, or pay
no,
attention to those
not really.
cycles?
Yeah,
Okay.
not really. My team does, and they've got some analysis on that, but I don't really keep up on that. That's their job.
All right. You know how people that are out there like us, someone will come and say, well, Pinkert's thinking this, and someone said to me that you were looking for an important low in the bond market in March. We had it, didn't we? That little pullback to
Yeah,
88.5 in
as a matter of
TLT.
as a matter of fact, I have ZNs here, so let's look at the TLT because that's the ones you're interested in.
Yeah,
Look at the cyclical pattern in here. We were looking for that trough to occur somewhere early in the year, right there.
yeah,
And it came here in January.
right.
And now we're in this rising phase, as you could see right over here on the dominant and the minor cycle patterns.
Yes,
And the reason that I have this pointing up into the rally into June, as you can see right over here, is
right.
because of this. And I'll show you the TNX, which is the 10-year yields. Look at the exquisite cycles that are in here. Just unbelievable inverse picture of money flows in and out of the bond market. And that's what you have here. We had been projecting that we would get the yields down to under 3.9% into this period, May, June, right there. And that's why the dollar, of course, is collapsing the way it is,
Right.
because it's money flowing to where it can get a better yield, into Europe and other places, or out of the US for that reason. So we were looking for 3.9% over here out into this May, June period. That is why we have this projection in the TLT of this rally over here into the May, June period. I only have this projected up to 95, which is
Yeah.
a 61.8, but it could go higher than that under a condition of 3.9% on the 10-year.
Okay.
So yields, bond market still to go up, flight to safety, and just a plain allocation changes for investors as they realize the stock market is not what they had hoped it would be, and money moving into the bond market just for their comfort.
Okay. Will you confirm the statement that recency bias of the dollar being a safe haven currency, or when it is weak, it equates to risk on, has changed, it's dead, and a weak dollar is now risk off?
That is, I would agree with that because of the relationship, especially to interest rates.
Okay.
And we have once the dollar, and last time we spoke, I talked about this low coming up and the dollar likely going to rally higher in there.
Yeah.
But look what happened. That rally came into February, and then it
That
broke
was
the
a tariff day. That was a
Yeah,
tariff day.
yeah, broke that key cyclical low right there.
Yeah.
And every time you do that, look at this pattern over here, which is fairly similar. And then you
Yeah.
break that cycle low, and it sets up for the decline into the trough.
Right.
This trough here, guess what? June,
It's
July.
way out there. Yeah.
Yeah. So
How
what does
about
that tell you?
95? We'll be beneath par by then,
I think it'll get below par. If you look here at the daily
Yeah.
patterns right here, you can see they're gorgeous. And what they say is another week or two of dollar weakness and then an attempted rally.
Right.
So when the dollar gets this rebound in here, it's probably going to align with a rebound in yields,
Right.
which also is coming shortly. All of that is going to be fake. And all of that will easily get people trapped because you can see all of this time in here where, or all of the space where you could get some uptick in the dollar market. But then when that's over with and this rally period's over with, the dollar's going to be falling again. Interest rates are going to be falling again. And of course, what does that tell you about the stock market? It will be falling again.
Right. I think we have everything cased. Did we miss anything? I love when you come on because we kind of we put the jigsaw puzzle together. So
yeah, I mean, you can look at the oil market. I mean, I think
I've been waiting for one more washout for a year, Steve.
Yeah.
Towards 62. I've a speed line there, and
Let me get this
I keep
analysis.
asking myself, am I going to be left at the altar because I've been talking about, I do believe there will be military strikes coming
Yeah,
up.
I mean we're having military strikes right now
Yeah,
as far as the Yemen and the Houthis go, and
right.
we don't know what will happen as far as the threat going to Iran. That
Oh,
has
yes, we
put.
do.
You think? Oh, what you think they're going to go after
Yeah,
them? So
look, it's been maybe have you ever had like a mission in your life? Well, not Netanyahu's mission has been to, he's been coming to Congress warning about this threat for a long time.
yeah,
And the regime, not the people, the regime in Iran has been threatening to wipe Israel out forever.
yeah,
So
absolutely.
Trump, there was an assassination attempt that has been on President Trump, who isn't the most forgiving person. He's not
Yeah,
the, but he's
I
not
would.
Pope John
Yeah.
Paul is going to go, meet the guy in jail. Oh, but he's dead. Can't do that
Well,
anyway.
if
So
if if you
go
believe
ahead.
in cycles like I do,
I
then
do.
where this rising phase is over here out in June, July, August, that would be probably where the bombing would come. But
Yeah,
in the
I
meantime,
do. I
in
do.
the
I
me
think.
in the meantime, this is still looking lower in here in the oil market. We had it as a potential failure. Look at here. This was marked sell zone.
Yeah.
I mean, and on the daily chart, I mean, it was spot on. So I
Yeah, it
can tell
was.
you, looking at this here, you can see that the end of the next cycle, which looks like it's going to be further declines, is June 5th on the
Okay.
daily
Right in
chart.
front of driving season.
Right. So, and
Okay.
you look over
Got it.
here, this is May, end of May, beginning of June. This says to me oil's going to be going down into that period.
Okay.
And you could get to $62 here.
Yeah. Okay. Well, I'm gonna be buying calls down there.
Yeah. And interestingly,
I'm not in the $100 camp, but
yeah.
89, 80 rally from 60 to 80 on an event. I think that's very viable.
Yeah, I think that's possible.
Yeah. So I mean, everyone's bearish oils now, so
Yeah.
except Oxy because Warren's. Um, why don't you show people how they could, check you out?
Sure.
Steve, we do something pretty unusual here. We interview competitors, but you
Yeah.
know what? I don't look at it that way. I look at it as wherever people hear my voice, if they find a place that works for them, that's the mission.
Yeah.
Okay, that's the goal. There are a lot of talent, really not a lot of talented people, but you are. So
Well, I'm
I
honored
want,
that you'd include me in that list. So,
yeah. I mean, look, I mean, most of the people I talk to, or I wouldn't waste my time, viewers' time, or anything unless there were
yeah,
things that people could learn
appreciate
from
that.
people. So
Well,
go ahead.
if you look here, you could see my picture here on the CBOE 1974. That's me in the corner with my hands up. That was one
Yeah.
of the, I got to the CBOE floor about maybe 8 months after it actually started. So
Wow.
been trading for over 50 years now, which is just astounding to me that I'm still here doing this and having fun at it. And we have a
It
membership,
is a miracle. It
yeah,
is a
isn't it?
miracle.
It is. Well, and I
Uh,
still have my mind is still sharp. I'm not so sure about my body, but my mind is definitely. Uh, so this is a membership site. We have a lot of actually a massive amount of education and analysis that we share
yeah.
with our members. We also have a day trader platform that we have a special we're running right now for $24.50 for the first month. It's fantastic. And if you scroll down, you'll get a lot of idea about many of the things that we offer in here and our membership. So you can see that right in here. You can come down and click on one of these and learn more about our memberships and the specials. And you can write to team@askslim.com and ask any questions, and we'll be able to answer that for you. So we have a great thriving community, just as I know that you do. That's what's great about putting us all together because our communities get to learn from each other.
Yeah.
I always want to share where there's good opportunities for education and analysis, wherever it may be. because I think that in our business, we all need to support each other. I mean, this is a
Yeah.
very tough game with a high percentage of people that try to be traders failing at it. So that you really have to, do what you can to direct them into the places where they can get
And
the
there's no
best.
law against, Steve, people have more than one trading account, right?
Yeah,
Some they use for long-term stuff and other for swing stuff, spreading.
right.
There's nothing wrong with being a member of more than one community. The
Yeah,
more
no,
intelligence gathering you do, and as you can tell, that's a perk of my job is
yeah.
besides getting to
You know,
talk
es-
to sharp
especially,
people, I get smarter talking to them.
yeah. I feel like, I don't know if you resonate with this, but at my age, 75 years old, I'm not worried about giving away anything anymore or anything like that.
Yeah,
It's just like
yeah,
all I want to do is serve people so that they can,
yeah.
be the best they can be at
It's
this.
yeah, it's our legacy in the industry that people 20 years from now will be saying, I remember how Steve would look at that cyclically, or that there's a three drive formation that Pinkert used to teach.
Yeah. Yeah.
So it's great helping people. I know that's in your heart, and
Yeah.
I always have a great time talking to you every 3 months.
Yeah, fantastic. Well,
So,
we're gonna be adding a great feature to our site down not that far off because we're training our AI right now, and our AI is
oh,
essentially going to be me.
okay,
So everything that I've learned, everything I've ever taught is going to be in there, and
wow.
people are going to be astounded by the quality of that.
All right. Well, you know what I say, Steve? This is my war cry this year. Ready?
You ready?
Let's have a good decade this year.
Yes, absolutely.
Steve Miller, everybody. Follow him on X at Ask Slim. What's your body weight nowadays?
My body weight.
Yeah, I'm asking you, Slim.
Uh, I
What do
I
you
weigh
weigh?
I weigh 228 down from the 250s, and that's
All
because
right.
I switched to a primal paleo type eating plan some years ago. I
Yeah,
eat no grains whatsoever. I had arthritis; it's gone because it's an anti-inflammatory diet. So
yeah,
I
right.
feel young.
All right. Well, not as slim as you were going over your CRB charts in 1980, but
No, at
huh?
that time I was about 192 pounds then.
You're in a fighting weight. All right.
Right.
Well, Steve, hope that pips just rain down on you and your people
Yeah.
this
Best to
quarter.
you.
All right. Steve
Take care.
Miller, everybody. People are thanking you. They loved it.
All right.
And
Great.
that's a wrap, everyone. You could join the team in 18 minutes on the morning edge. And how do you like me now? Short yen all week. Huh? Gold down. Who's short Newmont with me? Anyway, okay, have a great day, everyone. Sometimes you have days like this. I'll be playing Van Morrison's song on my Twitter feed. Mama told me there'd be days like this where everything seems to fit. All right, don't just count your pips, count your blessings. Adios, everyone. We'll wrap it up. TGIF tomorrow. Jobs report. Gee, just what we need, huh? Let's throw a little more gasoline on the fire. Adios, and thanks again.